Good morning, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on gold exploration and production today. We will hear from Mark Brennan, CEO and co-chairman of Cerrado Gold. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss some fine print during this Cerrado webinar. Forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Cerrado corporate presentation, and that can be found on the company's website, cerradogold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Cerrado. So we have Cerrado presenting today. Cerrado has a clear plan to become a mid-tier gold producer. They have an operating mine in Argentina, an advanced development project in Brazil, and both projects have lots of exploration potential as well. The company is also run by a management team with significant experience in the industry, particularly in Latin America. With that, I now turn it over to Mark to update our audience on the company.
Thank you very much, Tim, and thank you, ladies and gentlemen, for joining me on this call today. We're very excited by the progress we're making at Cerrado. As Tim alluded, our objective is to become a mid-tier producer, and very importantly, a low-cost mid-tier producer as quickly as possible. And we're hoping to be in that kind of territory sometime by 2025, which is really right around the corner when one considers where we are today. The company has two key assets, core assets. One in Brazil. This is our keystone asset, Monte de Carmo, a project in Brazil, in a very good jurisdiction in Brazil, where we don't have any major issues to deal with regard to topography or environmental issues, or likewise, we have very strong support of the local community. But it is a very, very robust and looks like it has potential to be one of the lowest cost producers of gold in the world. We also have a second project in Buenos Aires, outside of Buenos Aires in Argentina. This is Minera Don Nicolas. We're located in a very prolific gold belt called the Cerrado Massif. We've expanded production very quickly. We acquired the project in March of 2020, just before COVID. Irrespective of that, we've taken production from 23,000 ounces in 2020 up to 54,000 ounces last year. We're targeting 60 to 70,000 ounces this year and 70 to 80,000 ounces next year. So a very rapid and significant exploration development program there. I'll just note as well that these two assets are still very much in their discovery phase. They both have, significant potential to add very, very largely to the endowment of resources that we have today. We've done very limited exploration on both properties. Our objective is really being to get out there and drive the cash flows in the short term, but we see really strong potential, and we see both these assets as having the potential to be world-class assets. As Tim mentioned, we've got a management team that has delivered 4 or 5 projects and made a lot of money for shareholders historically. We know Latin America, South America very, very well. And we believe that these two assets are well within our capabilities to drive much more significantly. As I mentioned, not only are we looking at the production side, which will be a strong generator of cash flow, but we're also looking at driving value through the drill bit and growing the resources. So we see, very short-term value creation. Brazil, we're expecting to be in production by the first quarter of 2025. And so, not too far away, and we're expanding our production in Brazil, in Argentina, driving, again, more value. So I would say that from our inception, we're a new company. We started in 2018. Over the course of the last 4 years, shareholders have gone from 20 cents to now somewhere close to $1. But I still think we're very much in the near in the near term value creation phase. I think the greatest value creation is still to come. And so therefore, I think a good opportune time for investors to look at Cerrado. In Monte de Carmo in Brazil, as I mentioned, we have an 83,000 hectare property, a fairly significant property. We're looking at basically, quartz. We're looking at hydrothermally altered granites with quartz vein swarms. It's very good grade for Latin and South America. We did a PA which basically had exceptional economics based on our resource of about 1.3 million ounces. It came in with an NPV of 617 million after tax with an IRR of 95%. What we're looking at here is probably amongst one of the cheapest gold producers in the world. We're now in the process of completing a feasibility study that'll be completed by the end of May. We don't necessarily think it's going to be quite as strong as the PA that we completed in August of 2021, but we still think it's going to be very exceptional. And so from that perspective, we still think there's a lot of value that the market is not building into it right now. We also announced earlier this week that we have a very aggressive exploration program starting imminently to look to really drive that resource up from that 1.3 million ounces. When we acquired the property, we acquired it from two geologists that are known and credited with the discovery of the largest undeveloped gold deposit in Brazil today, which is the Volta Grande, owned by Belo's son. I've known these guys for 30 years. They came to me, telling me that they believe that there's somewhere between 5 to 10 million ounces on the property. Everywhere you go, there's gold. And so we're still in the early stages, but we think that I'm not sure we're going to get to 10 million ounces, but at the same point, we think there's a lot more gold than we see today. In Argentina, we acquired this project really at the time it was going to be used to fund Brazil. We basically saw an 8 to 9 year mine life of about 50,000 ounces. Unfortunately, in October of 2019, the Argentinian government imposed currency controls, which means it's very difficult to take money out of Argentina. What we've committed to here is that we've committed that we're going to grow this asset substantially based out of cash flows and funding that is internal to Argentina. So we're not looking to dilute the company for Argentina. It stands on its own 2 feet. But we see this as an asset that can grow to be very, very significant, like our peers that are trading, that are located very close to us. And I'll talk to you a little bit more about that. But we have a very significant land position in a very prolific belt, and we're growing that asset very, very strongly. Since we've acquired that asset, we've increased our production fairly dramatically. We've reduced costs. We're very good operators. We have a very strong technical group behind us that are able to come in and really take new assets by the hand and drive them strongly. As you can see, the production profile that we have is a pretty aggressive one, but at the same point, one that we think is very achievable, if not being somewhat conservative in what we think we can do. I mentioned the team. We've built a number of assets historically in Brazil, elsewhere, where we see the ability to grow this asset, the asset base with Argentina and Brazil very comfortably with the team that we have. Generally, the team are builders. We know how to build mines. We know how to develop mines. We know how to restructure mines. And that's a very good perspective in light of the fact that we will be driving these assets. But I'll also mention that we also have the capability to sell mines. And so if we were able to see if someone were to approach us on fantastic terms, we would not be amiss to look at that. With regard to Monte de Carmo, it's located in a very rich state called Tocantins. It's an agricultural state. It's a state where basically it's very, very flat with some hills, and where you see the hills is where you see the mineralization and the geological structures. What I'll say here is that there are roads everywhere. We're 1 kilometer from a paved road from our mine site. We're 5 kilometers from the main highway that goes to the north, 45 minutes to the capital of Palmas with 300,000 people. To the south, we have the Porto Nacional, a town of about 60,000 people. We have a 69 kV power line running through the property. So we don't have any garimperos or any NGOs to deal with. So it really is an optimal jurisdiction to be in. The topography is really just brushland. There's no forest. There's no impediments to aggressively moving a project forward. What's interesting here is if you look at the map on the right-hand side, this is Serra Alta, which is our lead deposit, where we have 1.3 million ounces. And basically the gray and the white areas are all areas that have been historically mined by garimperos and by the conquistadors in the 1700s. Basically, we don't have any more garimperos on site. We have no issues with the NGOs. The very, very strong support of the local community, which is really driving this project forward as quickly as we are. I'll mention that again, we're going to complete our feasibility by the end of April. By the end of May, excuse me. And the objective here is actually to be in construction sometime in the third quarter. So it's a very rapid turnaround. We expect our permit, the preliminary license or the PL, to be granted in February. And then 90 days later, we expect to get our implementation or construction license from the government. Well, the one thing I'll also mention is we're looking at, for the most part, open pit mining, certainly for the initial years of production here. It's a very easy deposit. The resource and the mineralization is very clean. We do have, where we see the greatest endowment of gold is where we close to sulfide swarms, but at the same point, the gold is not interstitial to the sulfides, which means it's free and liberated and very easy to process. It's very clean. It's gold. It's not a combination of metals. And so basically, when we look at our processing, our separation, 85% of our separation and recoveries are from gravity alone, which is somewhat exceptional. And that reduces dramatically our capital costs because we don't need a customized mill. And it also reduces our operating costs because we don't need significant chemicals or retention time in flotation. When we look at the addition of flotation and leaching, we take our recoveries up to about 98.5%. So it's exceptional in many different ways, high grade, open pit, clean ore in a very good jurisdiction to operate. So all those things are key ingredients of why this mine has the capability to be one of the lowest cost producers in the world. Also, what we're looking at is a low capital cost. We're looking at initial capital of about 125 million. We've looked at savings, since this was published in August of 21. I think that the feasibility is going to come very much in line with what we have here. The previous PA that we published had a contingency of about 25 million. So I think we kind of built in an inflationary and supply issue contingency that now we can quantify more closely, but I think it'll come in around that 125 million. Again, I see a little bit of a lower IRR after tax than we saw in the PA, but not dramatically, which would still be a very exceptional project. And again, the most important thing here is in the first 5 years of production, we're looking at about 150 million of cash flow with about 110 million of free cash on the basis of a capital build of 125 million. So really a very, very rapid return on capital, which gives us, and also a very low cost of CapEx to bring, a low value of CapEx to bring this project into production easily, where we're not going to have to dilute shareholders significantly to get it built. As it relates to the banks, et cetera, when they can see a 1.5 year return of their capital post-production, it's very attractive. We trade at a significant discount to our peers, even though we see tremendous value and return. Our hope is that as we complete the feasibility and we see more certitude coming to the project, that we will start to see that value being realized. Our development schedule is that we expect to receive the initial permit in February. We will complete the feasibility study by the end of May. We're already talking to project funders. We are looking for the construction license to be delivered sometime by the end of the second quarter, and then from there, our expectation is that we will be in construction starting early in the third quarter. It'll be about a 12 month, build. And so we will be producing gold probably by the fourth quarter of 2024, with the first full year of production in 2025. So from that perspective, we're pretty excited. This is moving along very quickly, and a year from now, we will be in a producing, just over a year from now, we'll be in a construction kind of mode. Looking at the second and most important element of where we're going to see growth and value creation as we build the project, is the fact that we have lots of targets throughout the property. You saw all the different workings previously that the Garimperos and Conquistador minings had. We have that throughout the 82,000 hectare property, all in different stages of kind of development. But we've gone very, very, we're going to be spending about $8 million, drilling about 25,000 meters from the end of the first quarter to the end of the year, to look to really drive our new resources. We've learned a lot. We found 4 key ingredients to where we see the best endowment of gold. One is that it's a proximity to the granite, near the granite where the granite is hosted. 2, where we see the greatest endowment is where we see the contact between the felsic volcanics and the granites. And then also what we also see is that they're close to the shear zones. You can see the black lines on the map on the left-hand side. Those are all northeasterly shear zones, which again is another important ingredient for finding the gold. You can see on the final less ingredient that we've discovered, which is drilling. Only Serra Alta has had any material drilling. All the other areas have had very, very limited drilling. When we acquired Serra Alta, it had 6,000 meters of drilling. It didn't have a resource. We went in and we drilled approximately 40,000 meters of exploration drilling in order to bring the resource up to 1.3 million ounces. We believe that there are probably 4 or 5 different areas on this property that, with extended drilling, will be able to look similar in size and nature to Serra Alta. So that's the bet that we certainly believe in for the next 12 to 18 months. First and foremost will be along the Serra Alta trend. Here we have, this is Serra Alta on the left-hand side in the pink, where the granites are meeting the volcanics. You're going to see that quite a few on some of the examples going forward. To the northeast, what we see there is a continuum of the gold moving to the northeast in the section demarcated on the right of E2 and E3 on the map on the right-hand side. This looks to us as though we can follow that for the next 5 or 6 kilometers and really just grow those sections of mineralization. We will start drilling there. Actually, we've started drilling on the section where the arrow is right next to the E2 and E3 zone is currently, and hopefully we'll have some positive results again before the end of the first quarter there. I'm not going to go into each and every different example we have, but you'll see we've got numerous targets that are highly prospective, lots of showings of gold. We see gold everywhere. Different forms of gold as well. As you can see, Divisa, where we've done a lot of trenching, a lot of ground sampling, where we've seen very strong indications of gold. We've done some drilling on certain areas just to gain knowledge of potential for future drill programs, and they look highly prospective. So I hope that by the end of this year, we'll be able to come back to shareholders with significant progress in terms of the development of the exploration program. In the interim, we continue to develop Minera Don Nicolas. This project was acquired predominantly in 2020 with the hope of actually trying to fund Brazil through the cash flows. But unfortunately, when the government imposed these currency controls, it put paid to that. But at the same point, we love this asset. It's an asset that hasn't been drilled largely from 2014 kind of timeframe until we started really aggressively drilling it late last year and early this year. And we're seeing significant additions to ounces. We're seeing additions to production. We believe that we're very, very early. Again, this is a discovery asset, even though it's in production. We believe we're very, very early in the discovery process. The Deseado Massif has projects like Cerro Vanguardia from Anglo that's produced about 8 million ounces to date. It has Cerro Negro from Newmont that has about 8 million ounces. We have Cerro Moro from Yamana that are basically now running around 3 million ounces. And these guys are all our neighbors. They're all very in close proximity on the belt. And so we think that we've only really started the discovery process, and we expect to see a lot more gold as we move forward. Here you can kind of see the kind of history of groups like Anglo and Serra Alta, who's kind of the older group on the belt, and then you had the Newmont Cerro Negro project, and Cerro Moro is more recent. But we are just starting. We see the ability to grow this very dramatically. And again, we're going to fund this only through internal Argentinian methodologies, whether it be through cash flow, whether it be through supplier funding, whether it be through borrowing in Argentina. But we will not dilute the corporate company in order to fund Argentina. But again, we're seeing really strong growth in our production profile. We've moved in 2021 from basically 23,000 ounces. 22 we've gone up to 43,000 ounces. Sorry, 2020 we were at 23,000 ounces. 2021 we were up at around 43,000 ounces. Last year we were at 53,000 ounces. Next year we're projecting 60 to 70,000 ounces. I think we'll be at a higher range there. And by 2024, our target is to be at 70 to 80,000 ounces. And then our expectations will peak probably in 25 around that 90,000, 95,000 ounce kind of level from where we are today. That's what we have visibility on. So from that perspective, what are we going to do there? I think in terms of there's the possibility, and I'll also mention our costs will be continuing to decline. Our expectation for this year is about $1,200 per ounce all in costs. Next year, we're targeting $1,000, where we hope to stick around that $1,000 kind of mark. So we'll be generating a lot of cash. Our objective here will be twofold. One, and very dependent on the Argentinian government. If they determine that they want to continue with currency controls, you're going to find that a lot of companies like the Barricks, the Lundins, lots of mining companies in Argentina, they don't have anything to do with their cash. And unfortunately, in Argentina, you've got 100% inflation, but you have to spend that cash. I think you're going to see a lot more acquisitions taking place over the course of the next 12, 18 months in order for companies to really just grow their operations because they don't have anything to do with the surplus cash that they have. So from that regard, I think we have the potential to be a beneficiary of that if that's where we determine in the best interest of our shareholders. So, we see lots of areas for growth. It'll come from heap leach. We're starting a heap leach operation. The first pour will be in April of this year, so that's right around the corner. We're spending $23 million to develop this asset. And basically that's all been funded through Argentina. We have another heap leach project which is close to our current plant, so it'll only be about less than a $5 million project, again being funded by Argentina. That should commence operations by the end of this year. We're looking at underground. We see underground as being a very significant contributor to the high grade ounces as we move forward. Here we're talking about 10 grams plus per ton. And basically what we're looking at is we're looking at most significant deposits that exist in Argentina today, as you can see from the slide that I showed earlier. Basically, they started off as open pit, and then they moved either to the heap leach side or they moved underground. And so we see significant contributions going forward from the underground where we haven't even started any significant drilling or production. We expect to have some production coming out of here by the end of the summer. So we see significant growth coming from Argentina. Lots of potential, lots of very interesting areas. But at the same point, I kind of say to shareholders, look at that as a bonus. Look at that as a lottery ticket. I think at 90,000 ounces at $1,000 an ounce all in cost, that's something that will attract, at a minimum, will attract someone to look at paying a significant price for. We have a current market cap of about $70 million Canadian, about 55 million US. Compared to our peers, I think we're significantly undervalued. Tim has his target price on us of 340, from a 90-cent level today. I think that we deserve that multiple, let alone believe that we can expand on that value. But shareholders, management owns about 40% of the company on a fully diluted basis. The reality is that I think our interests are very much aligned. Management and directors of Cerrado are going to make money more from stock appreciation than they will from anything else, and I think that should be somewhat of a benefit, a positive light for existing and potentially new shareholders. Again, no matter which metrics you use, we have fantastic returns on capital. This is going to be one of the lowest cost producers of gold in the world. We have lots of metrics which can show just how much value we have that isn't being attributed today. I'll leave it at that, Tim, for the moment. Very happy to address any questions that people may have.
Great. Thank you very much, Mark, for the informative presentation. We will now move to the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a couple of questions. You'd mentioned the currency restrictions in Argentina. Is there any visibility? Do you think there's any chance that they would lift those currency restrictions anytime soon?
I think so. Our lawyer, we have a very strong lawyer, one of the top mining lawyers in Buenos Aires, and his brother is one of the most senior. He's one of the most senior advisors to ex-President Macri, there's going to be an election in November, and it's very much believed that Macri is going to win the election in November. And I think that their objective is that within 18 to 36 months, they hope to remove the currency controls. If they're able to achieve that, then that'll be a big win for everybody. If they're not able to achieve that, I think again, what's going to happen is that the money that these large mining companies are generating, they have to put that to work. They can't just leave it. They have to grow. And what I think they've probably done initially is they've grown through optimization. They've optimized their own operations. Then they grow their operations. But those two things just generate more cash. And I think you're going to see more acquisitions taking place as a consequence.
Great. One question here on Brazil. How confident are you in the timeline you described for Monte do Carmo?
So confident that it scares me. The feasibility, we added an underground component, a very lucrative and profitable underground component to our mine life, and so that delayed our feasibility from April to May, to the end of March, to May. But I don't see any other delays that are going to get in the way. I think in terms of the permitting, we're very comfortable with. We work very closely with Naturtins, which is the regulatory agency we need for permitting. I don't see any issues there. I think we're ready. The feasibility is 80% complete to date. So I think we're in pretty good track. What worries me most is probably the conditions of the market where we are today. I would hate to be raising equity at these levels, but otherwise, I'm very confident in the timeframe that we've outlined.
Great. And one question, kind of even following up, actually two questions that are related here. But what is the current cash balance? Do you expect any other funding? And another question: how does the company plan to finance the exploration drilling in Brazil?
I guess in terms of, as of, the end of January, we're probably sitting on about $7 or $8 million. We're in pretty good shape in that front. You'll probably see something in the short term, which will be a great benefit, and something probably in the next few weeks that'll show just an additional cash follow-up, let's call it. I'm not going to go too much into that, but That should be in the next couple of weeks. It'll be non-dilutive again. And then beyond that, so that would put us in a position where we're a very strong cash position leading into project funding. And so, where we sit on the project funding side is we're talking to groups now about the potential for funding. As we've already received a Sprott royalty for Argentina and Brazil to get to expand Argentina and to buy Argentina actually and to develop Brazil. I think Sprott have expressed a very strong interest that they'll be wanting to put more capital to work for the construction of Brazil. And so what as owners, really what we want to do is we want to minimize dilution as much as possible. That's been a really strong characteristic that we have. We only will be 90 million shares into construction, which I think is a pretty good number to be at. But in terms of the where we go is we're looking at lots of innovative and different ways to fund until the equity markets come back, because the equity markets right now, in my view, are just way too expensive.
A different kind of question here, but you mentioned that the feasibility study is likely to have a lower IRR than the PEA for Monte do Carmo. Is this because of inflation, increasing input costs, or are there some other reasons?
I'd say there are probably three reasons. On the more negative side, and I'll say that I don't think it's going to be a substantial decrease. And historically, as Tim, you're well aware, whenever you see most feasibility studies that follow PAs are generally lower than the PA. So it's not going to be unusual occurrence. And I don't think it's going to be a dramatic fall. It's still going to be probably one of the best feasibility studies that I've ever seen in my career, in my view, as it sits today, as my knowledge sits today. But basically, there's been a number of things where we've seen a little bit of a decline. And one is that, on some of the preliminary resource that we had, because at the PE level, we actually had 60 meter spacing. When we went to drill, down to 25 meter spacings, we didn't see some of it holding together. There was a fold that didn't have a great impact on our first year of production, and that's kind of hurt us a little bit. But at the same point, what we found underground, and the cost of mining what we have underground has more than has gone a long way to compensate for that. So I think in terms of, I'd say on a normalized basis, it's a net even kind of perspective. What we've seen from external environment is, one, you're right. We've seen a little bit of inflationary pressure, probably to the tune of 5 to 10%, but that's had an impact. And we've also seen costs go up. And not due to supply disruption, not due to inflation, but due to the fact that they could do it. And one example, for example, is that, look at our mining. We're going to look at contract mining for the first few years anyway. And our contract mining terms have gone from $175 a ton to $240 a ton. That's a lot. That's had a substantial impact, not because, the guy had to pay more for his fleet or anything like that, but just, he flat out told us that because he can do it, which I thought was it was honest. But the reality is, so things like that have had some impact. But again, I think in terms of, we're very confident that our CapEx will come in below 125 million. Our OpEx will be a little bit impacted by the little bit lesser production. But really, it's going to be an exceptional feasibility study, no matter how you cut it.
Great. And then looking on the exploration side, in addition to Gogo Donza, what are some high priority exploration targets at Monte do Carmo?
Well, we have, the two that we will probably most, in 2020, we drilled about 7 or 8 different areas. And really the objective there is we probably did maximum about 3,000 meters per area. And what we were doing at that time was to really focus on prioritizing where we want to go and start our exploration. Last year, we drilled probably about 30,000 meters of infill drilling. So what we're going to do now is we're going to do 25,000 meters plus this year. And the two areas we'll focus on, one is that northeast kind of trend that we have coming out of Serra Alta. That looks like a no-brainer. If I had to guess, I would say that we'll probably gain, for every 100 meters we go, we'll probably gain 100,000 ounces. And I think there's probably potential there for 3 or 4 kilometers of strike. It's not all going to be mineralized, but there'll be a good chunk of it. As it looks to us today. We're also going to be up at Divizia in the north. We've done a lot of trenching there. We've done a lot of sampling. We've had some pretty spectacular numbers coming out of there. Now we just got to go and drill below those areas. And again, this is all very shallow. I'll just highlight again, none of our drilling or exploration activities or anything, most of them are below, shallower than 300 meters. And certainly there's nothing below 400 or 500 meters. So, those will be areas, but we have, again, there's two. I want to focus, as opposed to being on 4 or 5 different areas. I want to focus on a couple of areas at a time, because that to me is more than enough to really drive those ounces.
Yeah. And similar note, shifting to Argentina, is the company currently drilling in Argentina? And if so, is that focusing on underground potential or expanding on the low-grade heap leach ounces?
Well, we're doing all of the above. Again, we're spending about $6.5 million of drilling in Argentina this year. And just to give a little bit more color, when we acquired the property, we spent the first 18 months turning it around. And there's a long history of what we've done there. The team had done a phenomenal job. But really, that was during COVID, it was very difficult. For many different reasons, but really the first 18 months up until about November last year, what we were doing is really just bailing the water out of the boat and just keeping our heads above water. And so we weren't able to focus on life of mine, or we weren't able to look at growing the asset. And since November last year, we've really started that exploration and life of mine element. And so it's going to come from 3 major sources. One is going to be the conventional open pit mining that we've been doing. 2 will be from heap leach, which will come from the north as well as the south. And then on top of that, then we go underground. So those are the different areas where we're doing extensive exploration drilling as well as development drilling as well. Our hope on that front is by the end of the summer, if not by the end of the year, that we'll be able to come to investors and show a 6 or 7 year mine life with 80,000-90,000 ounces per year of production, which I think would set up this asset really, really nicely.
Great. And one question, kind of circling back here, but when would you expect to announce financing for Monte de Carmo?
Well, we'll complete the feasibility by the end of April. I would hope, the end of May, excuse me. I would hope that we're able to announce the end of July.
Okay, great. And one other here, looking at we'd spoken about the underground development potential and some of the neighbors in Argentina. What would you expect the timeline to be to do underground development on the project?
Well, we're working right now on the geotechnics and permitting for underground is more complex than otherwise. But our expectation is by the end of the summer, we'll be pulling out ounces from underground. The nice thing about the underground is, again, we're looking at 10% plus. Probably between 12 and 14%, kind of 14 grams per ton kind of material. So we don't need a lot of it to be very lucrative.
Oh yeah, great. And I think that's all the questions. Maybe one kind of general question here to finish things off, but just to review. We've kind of talked about it already, but what news would we expect to have over the coming weeks here from Cerrado?
Well, I think there's a lot of news coming and a lot of good news. I think in terms of the as I mentioned, I think we're going to see some, and there'll probably be a few things that'll surprise people, and I hope to the positive, some influx of capital, make us a very, robust and strong, strongly capitalized for what we need to do. And then, the pre-construction. And then I guess in terms of listen, we've got a feasibility study starting. We've got a exploration program starting in Brazil. We have a production coming from heap leach early in April. So there's a lot, right around the corner here that and on top of that, we're bringing a mine to construction. So a lot that comes along with it.
Great. Well, I'd like to again thank Mark Brennan for presenting today, and thank you everyone on the line for tuning in. Just a reminder that Red Cloud Securities will be back Monday afternoon when our webinar series continues with Kessel Run Resources presenting Monday, February 6th at 2 p.m. Eastern Time. Have a great rest of your day and a great weekend.
Thank you all.